Welcome back to Skytech-Lens. Ottawa has made a landmark decision. South Korea's Hanoa Ocean will build Canada's next generation of submarines, a $20 billion deal, the largest military purchase in Canadian history. This isn't just about new hardware, it's a strategic pivot away from traditional partners, signaling a new era of self-reliance and diversified alliances. The Royal Canadian Navy's aging Victoria-class subs, plagued by issues and ill-suited for Arctic missions, will be replaced by 12 advanced KSS vessels. The urgency is clear. Canada must assert sovereignty in the contested Arctic, and the new fleet is central to national security. By choosing South Korea over the US and Germany, Canada is redefining its alliances and industrial strategy, prioritizing technology transfer, job creation, and a robust domestic supply chain. This bold move declares Canada's intent to forge its own future, building new partnerships to secure prosperity and security in an uncertain world. Last week, Prime Minister Mark Carney toured Hanoa Ocean's shipyard in Geoje, South Korea, one of the world's most advanced shipbuilding centers. Carney's visit wasn't just a formality, it was a public endorsement of a new strategic partnership, sending a clear message to both Canadians and Washington. He inspected the KSS-3 Batch 2 submarine, witnessing firsthand the advanced technology, lithium-ion batteries and air-independent propulsion, crucial for Arctic patrols. Carney even boarded the UKS Yong Sil, experiencing the vessel's capabilities up close. The timing was symbolic. While Carney built bridges in Korea, President Trump was in Seoul pushing protectionist policies. The contrast was stark. Canada embracing collaboration, the US doubling down on Buy American. Carney's presence in Geoje capped months of technical evaluation, signaling personal commitment and cementing Hanoa as a foundational partner. Images of Carney at the shipyard rallied public support for a decision set to reshape Canada's defense and industrial landscape. Excluding the US from the submarine bidding was a calculated break from tradition. Decades of deep military integration and procurement from the US have been upended by recent protectionist policies and technology transfer restrictions. US defense contracts come with strings attached, limiting Canada's ability to build sovereign expertise and maintain its fleet independently. Ottawa refused to risk perpetual dependence on American suppliers or political leverage. American firms also tend to centralize high-value work at home, offering little real benefit to Canadian industry. The Carney government insisted this $20 billion investment fuel a domestic industrial renaissance, not just funnel money south. By turning to Asian democracies like South Korea, Canada is building alliances based on collaboration, not coercion. The submarine deal is the cornerstone of this new strategy, a declaration of independence from the American industrial orbit. It's a message to Washington. Canada will no longer be taken for granted. Canada's submarine shortlist came down to Germany's ThyssenKrupp Type 2112CD and South Korea's Hanoa KSS-3. The German Type 2112CD, a stealth-focused compact NATO platform, promised deep alliance integration and proven technology. In contrast, the KSS-3 is larger, more heavily armed, and features a 10-cell vertical launch system for future flexibility. The Korean sub's advanced propulsion and endurance make it ideal for Canada's vast, harsh waters, especially the Arctic. While Germany offered NATO synergy, Hanoa's package included comprehensive technology transfer, crew training, and robust in-country maintenance. The KSS-3's size, range, and growth potential tipped the scales. Hanoa's commitment to building Canadian expertise and industry sealed the deal. The decision was clear. The Korean offer best matched Canada's strategic and industrial ambitions. The US's aggressive America First tariffs have battered the Canadian economy, imposing steep taxes on industrial goods and energy exports. These sweeping tariffs disrupted $120 billion in annual trade, upending integrated supply chains and causing job losses across Canada. Ottawa views these tariffs as economic hostility, shattering the assumption of the US as a reliable partner. Forced to seek new markets, Canada could not justify awarding a $20 billion contract to an American firm while facing such economic aggression. Politically, rewarding the US was impossible. It would deepen dependence on an unpredictable neighbor. The tariffs did more than hurt business. They pushed Canada to seek partners offering collaboration, not punishment. South Korea's offer became more attractive as US protectionism grew. The submarine deal is both a response to and a consequence of this hostile trade environment. Canada is charting a new course, prioritizing partners who respect fair trade. The submarine deal unfolds amid another trade war, this time involving Canada, China, and the US. When the US slapped 100% tariffs on Chinese EVs, Canada followed suit under pressure, triggering Chinese retaliation. Beijing targeted Canadian canola with massive tariffs, devastating prairie farmers and halting a $3.5 billion export market. China offered a deal drop the EV tariff, and canola tariffs vanish. This put Ottawa in a bind. Prairie farmers demand relief, while Ontario's auto sector insists on keeping the tariff to protect jobs. The canola versus cars dilemma exposes Canada's vulnerability, caught between superpowers and internal divisions. The dispute pits agricultural interests against industrial ones, deepening regional rifts. The government's decision will have lasting consequences for both trade and national unity. Canada's ability to navigate these treacherous waters is under intense scrutiny. The canola EV trade war has split Canada along regional and sectoral lines. Prairie farmers, facing financial ruin from lost Chinese markets, feel sacrificed for central Canada's auto industry. Warehouses overflow with unsold canola, prices have crashed, and family farms are at risk. Farmers demand Ottawa accept China's offer, arguing their livelihoods shouldn't be collateral in a global trade fight. Meanwhile, Ontario's auto sector sees the EV tariff as vital protection against a flood of cheap imports. Premier Doug Ford and automakers insist on maintaining the tariff to safeguard jobs and the North American supply chain. The Carney government faces an impossible choice: help farmers and risk Ontario's wrath, or protect auto jobs and deepen prairie despair. This internal rift highlights the challenge of forging national policy in a country pulled between competing regional interests and global pressures. Hanoa's offer went far beyond submarines. It was a blueprint for a long-term industrial and strategic partnership. Unlike typical defense deals, Hanoa committed to full technology transfer, enabling Canada to build, maintain, and upgrade its own fleet. The deal includes exclusive agreements with Babcock Canada for coast-to-coast maintenance, creating thousands of high-skilled jobs and a new marine engineering ecosystem. Hanoa also bundled broader economic commitments, buying Canadian steel, exploring LNG deals, and partnering with Canadian tech firms. This holistic approach transformed the procurement into a strategic alliance, not just a purchase. The Korean proposal directly addressed Canada's desire for independence and innovation, making it the clear choice. It's about co-building a future, not just buying a product. The $20 billion submarine deal is a defining moment for Canada's independence and global role. It marks a decisive break from US dependence, asserting Canada's right to choose partners based on shared interests, not geography. The project is a catalyst for a new industrial strategy, building sovereign capabilities, fostering innovation, and reducing reliance on foreign supply chains. Arctic-capable submarines will let Canada assert sovereignty over its northern waters as climate change opens new frontiers. This is a shift from passive observer to active guardian of the North. The first subs arrive in 2035, just as the USMCA faces review. Timing that underscores Canada's new direction. The deal is the first step in building a network of partnerships stretching from Ottawa to Busan. Canada is investing in a future where it stands as a self-reliant, globally connected and sovereign nation, ready to navigate a changing world on its own terms. Thanks for watching. Subscribe the channel for more updates.